All right, folks, it's Scott Henderson Shooter. Good evening. Sort of our first evening town hall meeting kind of thing. Just going to do a quick review, look at some charts, and then, obviously take some requests. Of course, at the end of our presentation, please do review our disclosure. All right, let me jump right into the S&P 500 via the SPY chart. Now, often, you hear me talk a lot about charts that rhyme. In other words, the history of the tape tends to be something that flows here. And on the SPY, I have three rough outcomes here, but there is actually a fourth. This is what I'm saying. I expect a little bit of a drawdown. I'm going to steal the wave from 323.20 to the 1322. And I just want to post this, sort of like cut and paste it and set it right up to where we're at. Quite a decent amount of symmetry, overshooting it just a little bit. But this little juggernaut kind of thing from this 622.52 down to about 583. So I think there's about a $40 drawdown right here. Probably, I think it could hit us right here at the 618. I'd like it if it was rolling a little more, but the reality is this didn't roll either. And, we ended up getting that extension run behind that. So I think we see some significant resistance. And now that some of the Mag 7 has reported positive, now it's going to be left up to the rest of the earnings. So, my thinking is that sort of comes into play right towards the end of earnings. Timing just seems sort of optimal there in my view. The other thing I'd like to point out too is the dollar actually is pushing, even though we haven't really need to break above that 101 or that 100 for it to really dynamically change the flow. But realize that is a headwind for the indices as we continue to climb here. So that's another factor that I'm sort of bringing into the tape. Now, to me, none of these counts are excluded yet. I mean, it could be any one of the four because really the ABC, the base pattern, isn't invalidated. If this was a leading diagonal, it's not been invalidated, and they happen to come in, those two drop in right around the 61.8 as well. So either of those could be the case. The big difference will be is an ABC will get a shallow ABC, typically to about the 382, and then we'll continue, and then we'll find out whether that becomes an impulse, because it can be a shallower impulse wave off of an ABC, because a impulse wave can be either an impulse, ABC, in the structure, and those, quite often an impulse can come out and be a 33333 versus a 535. And basically that's an impulse, an ABC, an impulse, an ABC, and another impulse leg. So you can have all ABC patterns in an impulse wave and it still be an impulse wave, but more often than not, that ends up being a leading or an ending diagonal. Now, if we get this broadening look here, that would probably mean that this is the leading diagonal. So let me jump over to the NASDAQ. Really very similar look. Right now we're holding up well. We're going to gap up probably to 575 in the morning, I would think. Get a couple bucks off of the Microsoft Meta. That would be my thinking. Now, I'm going to do the same here. I had four separate visuals here of what I was thinking. Either this is a shallow impulse, which it could be, or it's sort of a deeper ABC pattern, which could be, or it becomes a much bigger impulse wave, where this ultimately is our one versus our one being down here, which all of those could be the case. Or we could have this ascending wedge kind of look to it. And we've not invalidated any of the structure in the mound structure at this point, so it's sort of just sitting there building it out. We'll know when the crossroad comes or gets closer in time exactly how it's going to shift. But here again, I'm going to steal that print from the 323.20 low and that 1122.21 high. And I'm just noting that that's different from the SPY as far as the end date of that leg, which I wasn't aware of that until I just looked at this. But again, we're overshooting this a little bit. But again, we're looking at a 541 down to about 596. So we're talking about $45 move to the downside. There's potential in the NASDAQ as well. So that 61.8 is up here at 570, which happens to be just a nice even number. What I refer to as a psychological number, where people sort of think it's maybe a little overdone. All right. So, but the NASDAQ is much more bullish than the SPY at this point. And it's completely recovered as far as whether it was trailing or not going into earnings, which actually is a good thing, because I was thinking in this range, it was sort of slowing down versus the S&P. S&P. So let's jump into the swing trade notes for July 28th through August 5th. We got a few names to cover here. Let's start with Marvel. Now, I would go to about 50% of this candle, just even where we are now, as far as my trailing stop structure. So I would use an anchor of 47.09 and at least 75.97. It should continue to push up to the 618. I do like this. You know, their chips, they're not, the orders are not confirmed, but they have an ACIS chip that's very, which is capable of running AI, which I wasn't aware of that until I actually dug into it a little bit deeper. But if that's the case and those orders actually get filled, that some people are guessing will get filled, you know, I could see us at all-time highs again pretty doggone quick. So I am quite bullish Marvel at this point. Now, RMBS, you know, we had a position on there, had a nice little run. I think we landed at the end of the day at a 177% gain on that one, and I took it off. I know Aditi still has it in her book. I don't know if anybody else has it. We probably have another leg like this here up over here. So it could definitely push to the 83.64. And I don't know why I trimmed the whole thing there. I just did. I don't know if it was my mood or what. But I would use 50% of this candle as my second anchor at this point. 37.42 and 69.19 is what I would use. And, you know, the target is way the heck up here, potentially at 91, is the equality of the extension of this line, which gets us up towards that 1382. And then it's really going to depend on volume at that point. You have nice, steady pumping volume. I mean, we have some very stable volume. It's not increased to this level. So this is a better push off of less volume, which is more indicative of squeeze, but we're really sort of seeing it breaking out of the squeeze with this last candle, which usually indicates that this was a flag. So equality, if we come in here and drop it an ABC, you know, ultimately the structure would be something equal, at least if we look at it this way. So we would say this is our B, and our C would come in there around the 618. Now, that doesn't exclude the fact that that can extend either. So we could get up to about 98, or a complete elongated move would be up towards the 238. So there would be nothing that would prohibit that tape from doing that. And considering we just are trying to poke our head above this resistance, as long as we don't reject right here, that's the only concern. That was one thing that got me to pull my orders, was I was looking at that and it was sort of teetering. We hadn't got that extra push up into there. And I was seeing some kind of rejection right here is what I was seeing on a shorter time frame. So that was my thought. Let's jump over to Netro Resources, AR. Nice little pop here today. I think we have found the bottom here. I do not have a position on this one yet. And that's only, yeah, you know, when I start getting trades that don't work for me and I'm sort of in a mixed boat, I'm not quite below a 60% win rate, but I'm at 62%, so I'm pretty doggone close to that. When that starts happening, you know, I start pulling back. I hesitate putting on new position because I'm thinking the market's going to roll over, because that's a progression. It happens over weeks. So the last 2 weeks, really 3 weeks, I've been struggling to stay in the gains because I've had setups that have worked and setups that haven't. And I use this massive scheme to manage that. And so when we start getting a breakdown where the setups don't play through and we can't get an exit in the money, you know, then that starts weighing on, you know, maybe we're going to get a pullback pretty soon. So that's the secondary reason why my thought here. But this looks really solid. 50% back is up to about 39 bucks. I do really like the look here. You know, the 100% fib is probably the most likely target, because I look at this as, even though this is kind of grouping one, but this is a flat. So this would be grouping one in the impulse. I look at this as grouping two. So we'll get a third grouping up here. So it's either going to hit around 46 to 49 is sort of the range that I would be thinking. All right, let's take a look at Lilly. Now, I don't like Lilly. Lilly broke below the prior wick on this candle. I don't like it right here at this point until we get back to this 742.41. Then I like the idea of trying to take it long. And I'm going to be really tight. I'm going to, you know, I put something on there. It breaks below that trend support that I'm noting there. I'm out. And that's going to be, you'll see that a lot in some trades that I do put on, because once the setup is broken to some degree and my conviction wanes just a little bit, I see no reason to hold it at these levels, because all I'm doing is holding risk, and that's not my game. My game is to catch the runners, stay in them for 50, 75, 300%, 200%, 150%, whatever it ends up being, and then capping my losses to 20% of my total gains. And I do that based on a weekly, a monthly, a quarterly, annually. If any of those numbers get hit where I'm over 20% losses of my gain, I literally stop trading for that week. And if it happens for a month, there's only been 2 times in my whole career I've stopped trading for a month because I really got walloped twice. But ultimately, if I get below 20% of my gains and losses, I shut it down because I'm ultimately in profits for the year, and there's no reason. It's just like right now. If I took 20% losses based on my gains for 2025, literally I'd shut down and go on vacation for the rest of the year because it's telling me something when that break. That means either the setups aren't working or the market has changed to a great degree where it just is not functionally working with those kind of setups. And unfortunately, we tend to stay in these little boxes with the setups. So I have my 1 and 2 favorite setups. I have 3, 4, 5, 6. I think there's a total of 7 that I really like. But going beyond that, I'm not comfortable going into setups beyond that because they haven't worked consistently for me. So that's sort of my take. So ultimately, when we get that little pullback down there, I would use an anchor of 677 or 709. And cash secured puts are probably pretty good on this. However, I'm probably just going to stick with calls. And the reason I like calls or puts directly is because it caps my risk. I prefer calls and puts versus cash secured puts because when the market turns against you, they can be brutal unless you take actions to protect your positions and go directly into puts if you're going to continue to hold it, which is what I started to do yesterday with CoreWeave. And then I added more this morning. And then ultimately I ended up dumping the cash secured puts. But ultimately I cut it because at that point there was too much of a likelihood of a reversion to the mean and I wasn't going to hold it. But we'll go through that chart in a second. So let's look at ATKR. Now, right now it's working. Anchors are 49.92, 70.42. First target is $86 here, right? I'm just looking at this first juggernaut. I just measured this first leg. So I went from this low, this high, and then I measured from this low at 63.79. And that's what I'm measuring on this fib level. The larger fib level, which measures this entire mound structure, 50% back, is up at 112. So this does have quite a little bit of upside. All right, let's look at COP. Now I just have runners here. I'm not sold on oil and this holding up with the rumor that's going. I got a piece on because I want to watch it. I know there's a number of you folks who like to trade oil. I like it though where we are. We have a huge back test here. 50% back is 107, right? 78.6. I've got it up here. Potentially it could get up here to that 123 again if we get this pulled out with any kind. ConocoPhillips is one that's a big benefactor, and I'm surprised it hasn't moved more than it has on the EU deal. Well, Jack right now is stopped, period, but it's done here. We're going to put another leg in lower. I'll reassess it at $12 as far as I'm concerned. All right, BTU. Now, this got a little bit of a bid, and then it gave it all back off of the EU deal. Now, I'm not sure exactly why I haven't had the chance to dig in here, but I do like it on a pullback back to the 50 fib, which basically just measures this break here. So we get back to about $14. I might consider giving it a shot. I didn't have a position on in that one to begin with because it just didn't hit my conditions when we came into Monday. Now, all right, let's go through CoreWeave. And I'm going to start off with that every Elliott wave intersection, and an intersection is where a wave crosses, right, has 2 outcomes, bullish or bearish. In any situation. Took me the longest time to understand. But the reality is you have to know when you're right and when you're wrong. And then you need to be prepared. You have to have a strategy in your mind of which way you're going to go based on that outcome. And you really need to map it out. The one thing nice about Elliott Wave is there's only going to be so many patterns at certain crossroads. And I'll give you an example of this wave we're in here. We have what was a leading diagonal, right? Which was that initial breakdown. Saw this floor here, right? As a matter of fact, I'm not recalling who, and I won't mention you if you're here, but I know somebody did sell 125 cash secured puts here. I tried to discourage that, but then we got a nice pop and really didn't come back and visit it. Then we rejected price here, whether or not I was watching that or not. So we've got a clean impulse. In other words, this is leading in a wave, which is likely, that's confirming it's an impulse. So This is an impulse. So at this point, this became an ABC, which is ultimately this whole leg here is wave 1. This is wave 2. And this wave we're putting in here now is wave 3. So if we take the symmetry of some equality right now, we could be down to about 77.05 just on this leg. Now, the likelihood that we bounced here, and this was an ABC corrective leg, was very high based on the volume and everything that was here. There, I had quite a little bit of conviction that we would get some kind of bounce. I was thinking at least back up around 140, and the fact that it didn't go there was a sign in the beginning, and I probably should have cut there, but I didn't. And then when we came back in and put in that additional low, I was looking at this support band here where we were, and that's ultimately right where I sold my 110s, was about 116.43 is where I believe it. But my mind, I didn't have this map here that I've drawn out now. My thinking still was that this was an extension in some way on this wave, and I just couldn't see what the pattern was. I didn't see us coming back to this 97 here. I saw this shelf was holding. And, that ultimately, when you're looking at wave structures, very often do you get a reversion to the mean with this of an aggressive trade without more indications in RSI like you have. We don't have that here in this tape. We don't have noisy RSI. We have clear, slow, and meandering. So it would imply to me that this was drive 1, and it, basically it began here and ended here. So this whole leg was drive 1. So I'm thinking we get another mound up here based on that concept. So structurally, my thinking wasn't off base. It's just in any situation, a tape can go against you in the wrong direction, and you just need to have a game plan of how to trade that. So at this point, I'm assuming this impulse leg continues and we get a bounce. But the reality is this could just be an ABC and end right here down at 90 and then give us a nice little bounce, but I think the most likely outcome is that we do get a reversion to the mean here, which is why I'm holding 3x of my $80 puts, which will get me out of the $300 loss I took on selling the cash secured puts. And then some. They were up today as much as 50%, but we've since wicked a little bit, which I'm not surprised of, because they will chase this along with the Mag 7. So we could get a little pop here and then it break down. It needs to clear above this prior high for that continuation to fail. So 113.53. JPM. Now I have cash secured puts, 285s, and they expire in August. I'm not going to change anything. I rolled those up. Anchor is 101.28 and 283.40. Done nothing wrong, just continued to grind higher. All right, let's look at Galaxy. Now, I like this for re-entry. I brought back. And you know what? Right now, the anchors I would be using is 820. Got to move this way the heck up here. And 25.93 is what I would use, but I would actually push up to this candle. Let's just move that up to this 27.18 is what I would use here where we are. Target is this 100 fib at least. I have some confluence in the counts, whether it's an ABC structure, larger ABC structure, or just a wave ABC structure. If it becomes an impulse leg, it'll be much higher than that. This does have quite a little bit of upside. All right, let's go through and look at HIMS. Nice pullout. We completely reorganized. I closed out. I ended up my notes were incorrect until I actually went and looked at my actual cash secured puts I had, and then the covered calls I had sold. I actually had 44 and 45s. So I rolled the 44s August up to 60, and I left the December 45s alone. Now I still have the 45 covered call, so I got quite a little bit on here. I'm not quite 2x my position size, but I'm pretty close. But we also, if we go back and take the initial trade off the lows that we caught, I'm still well in the money. I mean, I could spend another 200% versus 2x times what I have now. I'm still there. So right now, the anchor, I have not moved it. If you are in calls or something, I'd move it up to 56, and the prior anchor to that was 38.61 was the level we had. So we are basically chasing, I'm not sure exactly where that was, recalling at the moment, but that's what HIMS looks like. Now, I hope it's done nothing wrong here. It's just, this is a little shallow. So the question is, are we going to pull back maybe the 133 and give us another launching pad, which it could? Or is this just an internal ABC, which is a little unusual in wave 2 or wave 3, but it can be. I mean, it can be an ABC. And even though we really had an ABC here, it's still a little unusual in three. Almost always one reason wave three is usually the longest wave is because it's an impulse. Anywho, Hyatt, I would use 102.43. If you're still in it, you might as well just move it down to the wick at 144.04. However, it's done nothing wrong. I mean, you could come back with a strength shot. I just like when the market gets spotty and we get toppy, I want to tighten my stops up. I don't necessarily want to run a true trend support as an anchor because I don't want to give it that much room. I don't want to give it this, it's 144 down to 142. I mean, it's only another $2. But the reality is, if you were tight on your gains anyways, and let's say, for example, you didn't enter until 140 and you ran up to 152 and you didn't take profits at this point, you're barely in the money. I mean, $2 is a big difference in the trade at times. So that's just my mindset of why I use A versus B. Now, when we have a major bottom, right, you will see me give stuff much more room. There's a time and a place for everything. There's just a time and a place to add position, and there's a time and a place not to. And, just like the beginning of this earnings season, when we started out, I jumped on the banks, put some stuff on there, and, we got about a 50-50 mix on the banks, even though a lot of them run. We're still holding JP Morgan, Goldman Sachs work, okay? However, the calls on JP Morgan didn't work if you just did the weekly calls for earnings. So, it's a mixed bag. It's still, I look at earnings as a crapshoot, and I'm not really a gambler when it comes down to investment capital. I would rather stick in the box where I'm comfortable and what has been working in the past. All right, let's look at IBIT. Still nothing wrong here. Bitcoin's done nothing wrong. I mean, we had a big demand sell that hit the exchanges over the weekend, and we helped. I mean, that's actually a good thing. We had a large number of orders that came in. It was almost 3x the size of Bitcoin came into the market. And, so I think I'm being very conservative. I think this next leg here is this impulse leg, and it puts us up to $97. So IBIT's done nothing wrong. I see no reason to make a change. All right, let's look at Unity. Now I cut half of my position, had a little less than, or a little over 100% gain on those January 45s. So I'm only at 1x right now. I want to buy them back. I do, but I would like to pull back to maybe this C at $30 and then add them back. So I'm sort of waiting. That and my thesis on a little rut in the indexes sort of implies to me that, a lot of the developing tech names are getting spooked easy too. That's something else that I'm seeing. So, but right now, I'm going to just move the anchor down. Say 31.92 and 15.33 if you didn't trim or take anything off. At this point, it's done nothing wrong. SNPS, just a beautiful thing. Jesus, I wish every chart looked like this. Anchor is 365.74 and 624.57. Right? Now, I suggested that you start taking partials if you're still holding this. That's just my thoughts where we are right now. And a lot of it is because how extended this is becoming versus one, right? So I think we do get a decent pullback. Not really a reason to hold that heat. We probably do push to the 161.8. So I'm not going to say cut half or cut all of it, but 10%, take pieces off from there, depending on how many contracts you have. Just, get another couple of days where it's bullish, take a couple more contracts off, kind of thing. Just trim into it at this point of the move. All right, so let's look at JOBY. Now, it's likely you should have been stopped out of this. I did not have a position in this. The anchor we had was 496 and 1665. So that would have taken you out of 50%. This wick surely would have taken you out of the other 50%. It gets a pullback to this 1524. I'm interested in re-entering. All right, let's take a look at the VIX. We got a little bit of a bid today. I don't know, maybe this is it. It's right down, not quite, just overshot the wick. Didn't quite get down to our low, close to it, tested it, but it didn't push down there. So maybe this is the volatility shift. The only thing is it's kind of confirming here, so maybe it's not done. My $50 cash secured puts don't expire till August or mid-August, so we still got a little time. So if we get a rut and it gets me out of those, I'll be happy. If not, we'll do something on the other side just to absorb that a little bit. All right, SMC, I want to go back here because this is not even started yet, peeps. Not even started. I started squawking about this when Kirk sold his puts. I think right around here. May have been around. No, it wasn't that long ago. Maybe it was that long ago. I think he sold his puts right here around 45, 47. I think he caught it up here. And, I kept saying that this thing, even if it flushes, it's going to build back up and they're going to bring this thing back up because I think it's too important. And, their financing mechanism is much deeper than a lot of other server rack systems. So a lot of the mid-tier builders who are building these, they're financing these things at 9.5% or whatever it is. So the server racks, I think, just have some extreme upside. And they may not hit to the first or second quarter of next year. But, one of my numbers on this is way the heck up here at 107 at 1618, as far as the number up there. I mean, it's viable. The structure is there. The volume's there, right? We're getting back to these deep candles, these general candles that are occurring. I would not be surprised if you look back here, we got some generals that had a flat and then it took off. Well, we sort of have this whole thing is a much larger flat in my view. That's just what I see here. I'm after looking at so many charts for so many years, flats are important, right? And really it's a bottoming formation, but not really with a double bottom kind of thing. And, once we broke above what was, because our confirmed low was here, right? And then we put in a lower low with a divergent higher low in RSI. And then we took this out. This flush was your sign, and it took us right out. So whenever you get that kind of flush, at least you're going to get bid back up like this, and at least we got a bid back up like this here. So, that my thinking, once we get this breakout, I think you're going to have more of the funds pick this up, and then they'll chase it up to at least 80 or 85 from there. And that's just my thought. All right, let's look at PDYN for position trade. Tough wedge here to hold this. I don't know what your entry is on it, but I would probably be selling some covered calls if I had room in the position. Maybe sell 950 or 10s because I don't think we recover. I'm talking like 3-4 weeks out. I wouldn't go much further than that. Premium's not too great, but at least it insulates a little bit would be my thinking. So the anchor I was using would have been 483 and 765, and it's broke below there. So, I would be probably at a 50% position size if I wasn't stopped out with this look. And the reason is because I'm looking at this. This is the, like I say, tape has an MO. It likes to do what it's done before. And that's because, I'll use my Tesla thesis, that there's only so many Teslas on the road. We're not going to get 5 million more Teslas on the road. It's not going to happen. We know exactly what the growth, every stock has a specific growth rate of new buyers, right? And a percentage of those buyers become sellers at certain points. So the challenging part is looking at this ABC potentially to the downside. So I'd have a little hard time holding that, just to be candid where we are. But I definitely would like the idea of taking a shot back down here at $5, 475. That's all right. ENVX now should have been stopped if you were running my anchors, and shame on you if you didn't take 50% off. All right, we've broken below the flag. That means we're probably going to back test in here and bring the fib up. So again, we're probably going to come right to this shelf. It's good possible back around $11. So maybe I'll start entering back in, but I got to find a little better thesis because I don't ever like mound rejection. And what I mean by mound rejection is RSI is mound. It confirmed, right? It is a higher peak in RSI without a higher high in price. All right, and it's rolling over. Okay, quite often that's where you get a complete violation of the structure, which wouldn't occur here until we broke down below 832. But that could happen here. It could, we could get this leg kind of thing. So it's challenging. If I was holding, I would be selling some covered calls at least, and I probably would be at a 50% size, position size or less at this point. And then if it recovers, breaks out back above the prior high, obviously high at back. Sometimes there's not as much urgency to catch the move, because if you force yourself to get caught on the wrong side, you're worse off. I have no problem with cost averaging in, especially to longer term positions. Right now, where I really see this as being a good buy would be back around 9 is what I see that. All right, let's look at, where's the rest of my names up here? All right, let's go look at Marathon. Risk anchors are 311 and 1507's done nothing wrong. Miners have not gotten a bid like many of the other cryptos, which is one reason you haven't seen me post. And they haven't for a while. I don't know if that's because the additional finance structure for the miners is weighing on earnings that much and nobody likes the book. I haven't gone into the micro and macro, but my assumption would be that's what it is. But target structure, this is sort of a descending wedge kind of look, or it's sort of distorted. So there's, some people include the wick, some people don't, but, we kind of have this, and this isn't going to end a way out. So, we could be here for a long time. If you come down and use this, it ends quicker. But, ultimately looking at, that's sort of my thought on marathons. I don't know that I'd be cutting yet, but I wouldn't have a problem selling covered calls. All right, AEVE. It looks to me like it's going to come back down to this demand shelf. And unfortunately, it's doing the same thing, CoreWeave. And this is, when I was talking about the tech names, we're confirming here on the 4-hour. So we're going to get at least one more lower low in price and a higher low in RSI. So if we look at this group of threes, you see how the depth of these. So, the time frame is 525 through 625. So it's a month. So this corrective leg was 7 of 25 to, actually, that was pretty quick. That was 10 days. So we come out here. We probably have maybe 8.5, which happens to drop right about where that wave 5 is. So it could flush right back to that 1386. If I was holding it, I would either be cutting, trimming, closing the position. I don't even know that I would hold this look because of the breakdown. It gets back down here, buy it back. That's the way I would look at it. All right, Planet Labs, right at trend support. Find out where my anchors were. I'm going to pick some anchors and just call them out because I didn't get to that one, I guess. We're just going to say 414. And I'm just sliding up the candles to a similar anchor. And then 602. You could pull it down to the wick. It's done nothing wrong. Again, so you could come down and say 605 here. This just pushes up your leg if you're using. Because what I do is I set the alert on the candle. So, as I'm coming in here and adjusting it, my alerts change, at least in trading view. So that's what I use. So in this situation, it's up to you whether you use 602 or you use the 605. It's up to you. It just changes your slope as far as how you're in that position. Now, as far as the upside to this, I'm going to go out to the monthly on this one. If it'll give it to me now, it's too big. Or not enough room there. So, the 1618 is $10 here. It's got a lot of upside. It's not nothing wrong. This is mound 1. We're in mound 2. All right. This is peaking drive 1, peaking drive 2. This could have been peaking drive. Could have been. But I like clean, aggressive peaking drive. So I look at this as 1. This is 2. We should still get a 3 up here. So maybe we get to the 100 fib around 782 and then we pull back, even though we're doing this right here, making a lot of noise. All right. Breaks below this shelf, then I'm probably wrong. And this probably was the peak. Like I've said, know when you're right, know when you're wrong. So below 593, this probably isn't a flag, right? It's probably a corrective leg. I don't know that it'll do this, but it could. That's a nice flush. If you come back and measure that, that's probably at least a 618 and probably 786. So yeah, 786 is where it came back to as far as that whole flush. So if we just move this over to this leg, 786 puts us about 389 again. It could push. So we could get almost 50% from where we are here, 40%. So that would be my thought, how I would look at that. SPWR, and boy, this has been here forever, hasn't gone anywhere. It's done nothing wrong. It hasn't. I would just continue to use the same anchors that I noted down here with this wave. So 20 cents, and I'd come in and use this low at 119, but as long as it doesn't take out this trend line. So, ultimately, that 20 cents and 119, it's done nothing wrong. Most likely outcome is a breakout. Whether we get a breakout to 245 and it rejects again, or whether we get a breakout of that 245 and we twist to 319, really depends. But I'm going to say that the most likely outcome here because this flat now is going to be maybe a WXYZ, maybe as a squeeze kind of thing. Maybe something like that would be the most likely outcome, is what I would see here before it breaks out, because it is a clear basing pattern, so technically we're not bullish until it breaks above that 334. All right, HRTX, done nothing wrong. I'd use my risk anchor at 50 cents and 104. And ultimate targets are still up there in the threes. It's done nothing wrong. If we get a pullback, you're going to get hit a little on this. So be prepared to sell some covered calls if you've got a decent enough sized position to do that, if it breaks below this ledge at 167. That's just my thought. All right, let's look at silver, or SLV. Really can move this up. I've got an anchor at 16, 19, and 30.72. So you can really push up to this wick here, because it is coming off a little bit. I'm just going to come out to the monthly on this. I didn't run the wave scan, Mound 1 connection. Make sure all right, let me come in here. Pull this down. So the fib's off of, next target is the 1618, right up in that area. Just looking at the mound structure here, this is kind of our flats. So this is mound 1, this is mound 2. It's not as aggressive as this move here, but this could just turn into a runner too. And what I mean by this is quite often, when the funds pick these things up, and silver's got a little bit of an upside. It's already stepped up. Not that it's going to increase its slope, but it's already one band up in its slope off of this low. Wick back and tested it, it held. So it could accelerate here something with equality to what this range is, between this slope line and this slope line. So we could accelerate here, or at least 50%, I would think, where it would hold that. But it has the potential of accelerating, and it did that here. If you look at I've not drawn bands on that, but that's a very similar look to this. It's a clean 5 wave. I'm just going to go ahead and steal this just quickly so I can move it over. The slope's a little bit different, basically same concept. So 3 should come in around 39, then we get a decent back test, and then we could push all the way to 56 bucks if this is equality, and realize this is drive 1, this will be drive 2. We'll get a retrace, cup and handle, then we'll put in a drive 3 up here at a later point. So actually SLV looks good for continuation of the upside. So I would do what I can do to try and hold this. Maybe shift around with your positions, roll up, depending on whether you bought calls or common shares. Not sure exactly what you have. So CLS, somebody wants me to look at that one. 4 hour, what are the options? Clearly confirming. So this is peaking drive 1. You're going to get a peaking drive 2 and a peaking drive 3. Basically get 3 generals, which will end out the second part. This is mound 1 of this drive, mound 2. We're building out mound 3. So just clarifying the measurement for a second. So we'll likely pull back to like 192.70, and then we'll basically duplicate what's here. So you get another similar kind of general. 4 candles. It breaks below the body of this candle, though. I would take profits, because it'll probably fill the gap and you should be able to buy it back at 173. And that's quite a decent move from 186. That's my thought. Any other questions? Going once, going twice. All right, folks. Great trading. Until next time.